See everyone here. While we're getting the old Facebook Live warmed up. Andy, how are you? Andy, you there? Well, folks, unfortunately, this week it's Andy's time. Andy's turn to be missing in action. Andy's been called off to hospital just quickly. All seems to be perfectly fine and well, but he's had a bit of a wobbly start to the afternoon, and he can't join us today for Wealth, Wine and Wisdom. But I'm going to have a little wine, and maybe we can have a little bit of talk about the wisdom and the wealth ourselves while Andy is getting checked out by the doc. He seems to be fine, but he said he had a little bit of... wasn't feeling that well this week. So anyway, there you go. So hopefully he's all good. I've been texting him, so he's fine. He's on his way to get a bit of a checkup. Can't join us today, so I thought I'd just do a quick snapshot of Andy stuck there in a wonderful pose. There you go. So hopefully everyone is well. Hopefully everyone is, staying out of trouble this afternoon. So I thought I'd try a bit of hand solo today. Hand solo on the old the Wealth, Wine and Wisdom. Won't probably go as long, but I thought I'd make sure we just check in as a crew, as a team, and see how everybody is. Give us a shout out in the chat if you're here listening in. Friday afternoon. It's nice to have a little bit of chill and downtime and, chew the fat, see what's going on this week. So I have got myself organised to run the show by myself. Not as exciting as it is with Andy, I'm sure. So, gang, if you got any questions, whack them in the chat. Alison, I know you had some stuff that you wanted Andy to maybe talk about, and some of that life insurance stuff. But put them in the chat, gang. I'm happy to answer any questions, or we can have a bit of a talk about what's going on. But I'm just going to dive into some of the things that's happening for me / you in the property world for a quick afternoon in the world of property. What's happening this week has gone on in the last little bit, and it's been pretty interesting times. There we go. We've got a few people giving us a shout out. Raylene, good to see you here. Hardik, dialing in from YouTube. Yeah, YouTube seems to be a bit easier to get on in to the lives that we do. So, if you're there, give us a shout out. There's Jeff. Good to see you. Top and tail, Alison, Jeff, top and tail of the day, in the morning for a coffee, and in the evening for a glass of wine, which is not a bad idea as we go. But for anyone joining us who haven't dropped by before, welcome. Jason Witten's my name, and usually I do this with Andy, my compadre. That's him over there. Yeah, over there. But he's not feeling well, so he's gone to hospital. No emergency or crazy things, but he's just getting checked out. Just make sure got no challenges. Usually Andy and I get together and we have a chat about our two worlds meeting. My world of property, his world of finance and shares. And we do a bit of a debrief on the week of wealth, on the week of things, all things wealth as we go. So there you go. We've missed each other all day, Jeff. There you go. Yeah, I think he's fine. I've been texting him, gang, so I don't think it's a big deal, but his heart rate's up and he's having a bit of a sweat. Sounds like it might be some virus, but he says he feels, average, but not terrible. But anyway, fingers crossed. We'll find out maybe even during the show. So there we go. Oh, good. Well, I'm going to sort of charge into it, gang, and I'll see what I can do. A couple of questions. Alison's got a question, but I'll just do a little bit of the things that we normally do, which are, what's in the news. What's in the news, gang? Out and about. I've been having a bit of look at what's going on, but I don't know if you've been noticing. The world's pretty excited about the world of real estate, and things have been going pretty nicely for us as property investors. We're all on the up and up. But if you have a look at this, it's pretty interesting. The past month, imagine that, 3% a month. Your property values are going up 3% a month in Sydney, Hobart, Canberra, regional New South Wales. Some of this is pretty interesting statistics, and for many of us, we're going to be sitting on, reasonably large amounts of equity, gang. You and I have talked about this before. If your values are growing now, make sure you lock in your equity. Get yourself sorted as we go along, and make sure you're locking this sort of stuff in. But one of the things that, we're seeing is pretty well everywhere. Everywhere's getting some growth. Have a look at Darwin. That's crazy. Crazy. Past 12 months, 20%. Yeah, it's an interesting thing, isn't it? And this is, one thing that, I've got to say about, the idea of growth in the marketplace. These are averages, and smaller places can get bigger averages because there's less volumes, there's less sales when it comes to the marketplaces, and there's less supply often to those marketplaces. So don't get sort of swayed thinking, shiver me timbers, I need to run off to Darwin. I need to run off to, nobody talks about Adelaide. Well, Adelaide's a nice town, Hardick, at the end of the day, the challenge for Adelaide, and I think it's the same for places like Perth as well and Hobart, they're disconnected economically, from the East Coast. And, sometimes that becomes, a bit of an issue that, most of us aren't really prepared to sort of, cross the gap on when it comes to understanding those markets. But, certainly Adelaide's, a little bit of a winner. Hobart, Darwin, Canberra. My point of this slide, though, gang, is if you're making gains in those locations and those markets, as you guys know, we teach diversification. We teach a diversification strategy. I think it's very prudent. I think it's very smart when it comes to you and your property portfolio to grab some of that wealth and equity when your local market grows, and spread it around a bit when it comes to the diversification, the safety mechanisms of your portfolio, right? At the end of the day, think of it this way. You've got, let's say it's a couple. Let's say there's a couple, and we're talking about a portfolio. You have your home in Adelaide. You've got one job and two jobs in Adelaide. Now you've got an investment property in Adelaide. Your complete economic, personal, financial exposure is in one economy, one state, one city. And that's, for me, I think it's smart not to be exposed like that. And that's why we teach, a bit of diversification, a bit of economic diversification, a bit of tenant diversification, a bit of state diversification when it comes to your property investing portfolio. So, gang, it's good news, though. People are making money, and you can't complain about making a buck or two, that's for sure. And if you do, you're probably a little bit of a, an Eeyore, let's face it. But, for all of us right now, good idea to take advantage of this when you can. Here's the other one that I like the idea of right now. Queensland leading the growth. Now, this is interesting. Bumper year for the East Coast as sales hit record highs as we go. Our first investment property in Perth, Hardick. Perth's a great spot. Certainly economically, it's a strong town. It's just a bit disconnected from the East Coast. And, my wife, who's on right now, she's born in Perth. I spent, 3-4 years. I can't remember how long it was, Shays. Maybe you're on there. 3 or 4 years in Perth as well. My brother spent many years in Perth. We've still got family in Perth. The idea is that, sometimes your local area, while in the moment is doing well, longer term, you want to be diversified a little bit as you go along, and make sure you think about what that might look like. Yeah, Hardik, mate. Make sure you reach out if you've got some challenges in that servicing space. The rents have been just fantastic everywhere. Actually, Perth, interestingly enough, Hardik was one of the has led rent growth in the last 6 months. Perth has led rent growth in the past 6 months. So maybe it could be time to revisit your property in Perth if you haven't already, and make sure that you get the rents up and keep an eye on that as we go along. Hardik, that could be something to have a bit of a look at, mate, as you charge along there, building your portfolio. So, listen, Queensland's leading some growth right now, and, that's nice. You got the rent increase. Good man. Queensland leading some growth right now, gang. And, for all of us, that's a nice thing. We were talking about property prices going up in value in Queensland for a while, but, a few things sort of held it back a little bit, but it's having its time in the sun right now. And I think it's going to get a double whammy for you guys in the mentoring program. We've got some special guests coming up in I think it's 4 weeks' time when we're talking about the Olympics and Brisbane winning the Olympics bid. It's pretty well a hands down. Brisbane's got it in the bag. And what's that going to do? What's that going to do? Yeah, go Jace. Absolutely. Go Brisbane. What's that going to do? I mean, on top of already lots of attention for Brisbane, and the property prices in Brisbane already going quite nicely because of undersupply, because of COVID, because of attractiveness. Right now, gang, Brisbane is almost 50% cheaper than Sydney, average price. Get that, gang? Yeah, ka-ching indeed, Jace. Ka-ching indeed. And there's an Olympics coming, and it's got a boom going on. I think this is Sam coined it the other day. There's a double wave coming, and it's probably once in a 50 years, a double wave cycle going to hit Brisbane, kind of at the same time. So for us, we've been talking about Brisbane as part of a diversification strategy, gang. We didn't see this coming. None of us. Don't think that I'm sort of talking it up going, oh, we know what's coming. That's bullshit. But what we do know is that there are good locations and good strategies that we talk about, at least 3 locations for diversification. And you, as a property investor, can benefit from that sort of stuff as well. So, Bob's giving it a bit of a shout out. Lots of houses around Wollongong selling over $1 million. Gee, I remember back in my day, Bob, back in my day, I remember when I first started out. I wish I would have kept the newspapers that I did when I first started out. Back in the olden days, when I were a lad, I feel like I'm a really old guy now. Back when I were a lad, when I first started out looking at properties, you couldn't get access to the information. And realestate.com, ladies and gents, realestate.com only started in 2003. 2003, right? And you're like, what? It's been around forever. No, it hasn't been around forever. You know what you used to have to do? You used to have to go to places and buy their newspapers, or ring up somehow and get somebody from somewhere, another state, another town, to send you newspapers to get information. Yeah. Figure that. I wish I would have kept them. Gee, I tell you. But Bob, you're right. In Wollongong, it's just crazy. I remember Wollongong, you could buy houses for under $100,000, $100,000. Pretty cool. And right now, you know what? I reckon in 20 years' time, we'll be saying the same sort of thing about places, that we're sitting at right now. You know what? Mark my words here. Put it down, record this out loud. Actually, it's going to be recorded out loud. In 20 years' time, we'll be all lamenting, going, oh, you know what? I remember when you could buy a house in Brisbane for $500,000. 500 back in those days. I wish I bought 10 of them. We're sitting here right now going, 500 grand, that's a bit expensive. It's crazy thought. It's just mad. Anyway, that's the way this stuff rolls, gang. The big wheel keeps on turning. The economics keeps on pushing along. And you, as a property investor, me as a property investor, we got to be on the field taking advantage of a bit of this, getting a piece of the action as far as I'm concerned, as we go. Yvette giving us a shout out about up in Cairns. The houses in Cairns selling, and other sellers getting their asking price. Hey, that's a good question. One, I don't know the answer off the top of my head, Yvette, but we could find out pretty quickly when it comes to volumes up in Cairns and Townsville and things like that. But what you can do, there is a few websites, SQM Research, Walk Score, Microburbs, RP Data, and also realestate.com can show you sales volumes, and you can see whether there's discounting or not in some of those areas, Yvette. So maybe check out a few of those websites for sure. It's interesting, Cairns, Townsville. We've done investing up in Cairns and Townsville, literally in every town in Australia. When we first started, it was a buyer's agency. We were buying all over the place when it came to properties and deals. But one of the things that we learned is that many investors aren't capable of handling the volatility of smaller places as we go. So there's someone's giving a bit of a shout out for Toowoomba. We did some deals in Toowoomba. Fantastic little town. I really like Toowoomba. I think it's a real goer. A great town on the doorsteps of Brisbane, up in a really leafy, amazing highlands setting. I think it's fantastic. It's certainly got all the hallmarks. If anyone knows Sydney, all the hallmarks of a Bowral, that not the Blue Mountains, but like Bowral, and down the Southern Highlands. But the challenge is a lot of people don't really invest for the long term, and often the psychology, the emotion of investors gets in the way of actually being a good investor. I talked a little bit about that this morning in one of my coffee lives as we go along. But yeah, Toowoomba's good. Listen, Queensland's going to get its go. It's going to get its turn in the sun. The challenge, what we're going to find, gang, is with, certainly Sydney right now. Sydney prices have gone up significantly. Wages have not gone up significantly. And what we're going to find in places like Sydney is the wage issue, the ability for people to afford property, and or the ability for the owner to get a decent rent is going to find a ceiling, all right? And I would say I'd give Sydney maybe another 12, 18 months of momentum, not massive momentum, but reasonable momentum, and it'll slow down. It'll be significantly overpriced in anticipation of capital growth. That won't occur because wages can't keep up, rents can't go up that fast, and nor can interest rates go any further down. All right? You listening? You hearing me? you hearing what I'm putting down? So Sydney, Melbourne's probably, I reckon, 3 to 5 years away from that. It's still less expensive in Melbourne, about 30% less expensive. And the wages are still pretty good in Melbourne in comparison. But Brisbane, absolute winner. Canberra, that median price has shot up. Canberra has the highest median incomes in Australia. So, just think about that as you go along. But yeah, Queensland's getting a go. Gang, team, Queensland's having its time in the sun. If you've got a piece of Queensland, fantastic. If you haven't, why not? Get on that thing right now, as far as I'm concerned. Anyway, I'm hijacking the show today because Fenton's not here. But I chucked one in for Fenton today. I said, look, the ASX to rise and S&P and NASDAQ have reset record highs in the share market. Woo, that's crazy. Andy, what have you got to say about that? Are you there, Andy? Let me hear what you got to say. Andy. He's not there. Anyway, doing really bad jokes. And Andy's not around. But anyway, the point is, gang, there's money everywhere. Everyone's kind of buoyant when it comes to, getting things going. There's cash flowing through systems. There's cash going in America. The shares crashed on Monday. And that's the thing. Isn't it interesting, Alison, how volatile like the concept of shares can be? They can go up and down like a yo-yo, right? Actually, let me see if I can grab something here. I think I did it last week. Last Wealth, Wine and Wisdom, when it came to this. Check this out, gang. It's an interesting stat when it comes to property and then the share market. Australian shares, the probability of a negative return over 1 year has a probability over the last, 13 years, interestingly enough, 1 in every 4.3 years has a negative return in shares, quite a significant negative return. 1 in every 3.76 years in international shares, and 1 in every 9.39 years in property. That's a really interesting stat, right? So property's much less volatile when it comes to, the price rising and the price falling when it goes to. Check out the Aussie bonds and the global bonds and cash. That was it. That was 2019, that stat. But you can have a look at that there. I can tell you right now, that is not. They're not getting those numbers at all right now in the marketplace, are they? That's for sure. But anyway, at the end of the day, gang, what we've got is we've got a little bit of something going on when it comes to the stock market and the share market. For us as property investors, we need to keep an eye on that. Diversification in location and state and economy smart for property, and certainly diversification in the share market seems to be smart too, because it's reasonably volatile as you go, as you roll along. Bob gave us a bit of a shout out there. Interest rates going up is not going to help anyone. And they may adjust a smidgen, Bob, but right now, the word on the street, or actually not on the street, but in behind closed doors, is significant rises in interest rates won't occur for many, many years. And until unemployment is down significantly and our GDP and our wage growth, gang, wage growth is the thing. Wages to grow is what we need in this country, and we need it to happen at some point, sometime soon, which would be great. So keep an eye on that one as we roll. But it's interesting also, even like us, at Positive and in passionate property investors, we're mad about this stuff. Everyone's winning. We've got money. Everyone forgot about what happened in 2017 and 18 and 19. We had actually a 10 to 15% total market adjustment across the property marketplace, and there was nothing wrong with that. That wasn't abnormal. It was very normal. We do get market going down, and we do get markets going up, and property values do fall. And if you don't think that, then you've got rocks in your head and you've been listening to rubbish. But at the end of the day, we all understand that property is a medium to slow vehicle over the long term as a property investor. But, what's it saying here? Fewer vendors sold at a loss. And I think I showed this stat before. And it's always been interesting. Yep, good time to buy. I think so, Bob. listen, I think always a good time to buy. If you're not in the market, you should be in the market. That's the way I roll. That's the way I think about it. But you know what? It's interesting here when you have a look at a few of these stats, right? The average ownership length of people who lost money in owning a property. Check it out. Check this out. The average ownership length. Someone owned property for 6.1 years on average, sold it, made a loss on a house, and 6.5 years for units, okay? But then if you have a look at the next part, which is even more interesting, all you've got to do is, if you want to make a profit, you got to hold those assets for between 7, let's call it 8 years and 9 years, right? So people got to this point and were literally 2 years away from making a profit on average, all right? And this is the interesting thing when it comes to us as property investors. You know, we got to make sure we stick with it and go the distance, gang, when it comes to this sort of stuff. So, you know, at the end of the day, I'm a property guy. That's my cup of tea. So that's what's going on in the marketplace. Plenty of market mayhem, exciting mayhem, positive news, which is fantastic. And that's good news for us as property investors, which is good. Make sure you lock in your equity, folks, and continue to do deals. If you're in the market and you can buy, then I would be buying. And not because the market's going well, because that's your plan. Your plan is to buy. You've got finance, you've got equity. Get on with it. That's the way I see it anyway. Alison had a question here. I might answer this question now. How soon beforehand should you get finance approved prior to an off-the-plan settlement? Well, Alison, it's a good question. It's an easy one to answer, which is, I'll stick with the green. Over time, let's say your investment is over 18 months. You put down your deposit right there. That's your dollars and cents. Okay, that's where your deposit comes from right at the start. Okay, the time frame usually to get ready before settlement is no more than 3 months out. Okay, 3 months out. Now, the challenging part to try and work that out, Alison, will be the developer telling you, hey, it's 3 months out. And so what you've got to do is make sure you keep an eye on what's going on in these construction timeframes, because sometimes they can sort of push out, 1 month or 1 month there, and that can be inaccurate. Why is it 3 months? Because most lenders don't, a valuation won't go any longer than 3 months. An approval in principle, it's not called a pre-approval these days, an approval in principle. An approval in principle, it doesn't last any longer than 3 months. Your paperwork, your pay slips, etc., is not valid after 1 month, actually. You've got to have the latest pay slips in your application, etc., etc., etc. So, that's it's a pretty easy one to sort of answer for you, Alison. But so around about, get yourself ready around about that 3 month or less mark before the settlement time frame is on the horizon as we go. All good. Well, gang, I thought I'd just sort of try and do a bit of hand solo tonight. I'll keep it short and I'll keep it simple. I might keep it. I might leave it there. We're thinking of Andy. We're thinking of you, Andy. Get well soon, brother. Make sure you rest up and take care. We're all sending you good vibes, and make sure they look after you in the hospital. All right. Yeah, I think you'd be right. I think you'd be right, Alison. I think you'd be right. And give us a shout out if you need anything, buddy. Thanks, Nikki. Usually it's a bit better with Andy, but he's not here tonight. I'm glad that was helpful. Anyway, gang, I'm going to leave it there. Wealth, wine, and wisdom done. If you have any questions, whack them in the chat, or let us know via an email if you're in the mentoring group. You guys know how to get in contact with us, and let us know any questions anytime. Always happy to talk through them. On Fridays on Wealth, Wine and Wisdom, usually around about 5 o'clock on a Friday, we get to spend a bit more time than normal hanging out, talking, chewing the fat, and dissecting the week of property, the week of finance and the share market, and see if we can't help you guys keep yourself on track when it comes to building your property portfolio and building your wealth as we're rolling along. So that's it, folks. You guys have an awesome weekend. Wealth, Wine and Wisdom done and dusted without my compadre. It feels a bit weird, but thought I'd better show up and say good day. And yep, we all should make sure we raise a glass to Andy and send him good vibes to get well soon. All right, gang, take care. All done and dusted. Thanks, team, and bye for now.